Welcome back to Live from Paris. It's time now for a look at all today's business news, and for that I'm joined by our business editor, Marcus Carlson. Hello, Marcus.
Hello there, Lorna.
Right, so we're going to start off, of course, with the stock markets. It's red at the opening here in Europe, unfortunately.
Absolutely. European stock markets, they're on course for their worst weekly drop since November. Let's bring you the figures. The FTSE 100 is... well, it was down at the open, as well as the Paris CAC 40, as well as the Frankfurt DAX. Let's also bring you Asia, because in Asia we saw a real sell-off earlier. We saw the Nikkei 225 index drop more than 2%, for instance. The Hang Seng, as well as the Kospi in Seoul, they were hard hit, and much of the jitters that we're seeing in the stock markets and the toing and froing, if you will, it stems, of course, from the Eurozone. There are fresh warnings that Greece could be heading out of the single currency area, and that came as Fitch downgraded Greece from junk status to further into junk status on Thursday. Fitch downgraded Greece's credit rating from B- to CCC, and the credit ratings agency is quoting the higher risk that Greece will have to leave the Eurozone after the inconclusive election on the 6th of May. Speaking here in Paris this morning, the German finance minister Wolfgang Schäuble said that he's still hopeful that Greece will remain in the Eurozone, and he hopes that that will be the case. But he also said that Greece can't walk away from the bailout deal that saw Greece agree to making harsh austerity cuts in return for 130 billion euros worth of aid from the International Monetary Fund, as well as from the rest of the Eurozone. Schäuble also said that it could take between 12 and 24 months before the Eurozone crisis is definitely resolved and before we see some calm in the markets. At the same time as Fitch downgraded Greece, Moody's, another credit ratings agency, has come out to downgrade 16 Spanish banks. They include heavyweights Santander, which is the Eurozone's largest bank, as well as BBVA, which is the second biggest lender in Spain. So some real heavyweights, as I say. And Moody's quotes the risk that they'll be hit by Spain's deteriorating economy. And meanwhile, the Spanish government has come out to deny claims or reports that the partly nationalized bank Bankia is under pressure, and that people are withdrawing funds from that bank. Basically, that there's a run going on Bankia. The Spanish government once again denying that, and that follows a report in a Spanish newspaper. Let's get more now on what all of this means. Joining us from London is Joshua Raymond from City Index, where he is Chief Market Strategist. A very good morning to you. Now, what do you make of what's happening in the markets this Friday morning? When will all of the troubles really stop for the Eurozone? That's something that we've been asking time and time again, and time again we have been let down.
It's probably going to take a much longer time than, say, a week or a month. I agree with the German finance minister. It's going to take some time. I mean, let's not forget it's been going on for a couple of years already, although with different phases of severity. So it's going to keep going on because, let's be honest, the solution in the longer term is going to take time. What we're looking at in the short term is we're looking again at maybe something from the ECB, potential liquidity operations that might help to cool bond yields in the near term, and that's going to help contain some of the virus spreading, so to speak, that's happening within the Eurozone, the broader Eurozone, that obviously came from Greece and now spread it to Spanish and Italian bond yields. So it's going to take a little bit more time.
If we look at the Spanish news in particular, that downgrade by Moody's of Spanish banks, how bad is that news, and is it something that we didn't really know before?
Well, it was actually speculated quite heavily in yesterday's markets in the afternoon session. So you actually saw the markets come off quite a bit in the afternoon yesterday on the back of this. So it was kind of well known that it was likely to happen. So it wasn't really too much of a surprise. But it does become, unfortunately, it deteriorates the situation further in Spain, because obviously if they've got 16 banks that have seen their credit ratings cut, and also let's not forget quite a number of them still remain with a negative outlook, so potential for more cuts to come in their ratings. borrowings, then it's going to make lending in between the banks even more tougher, because you've got certain barometers that you have to hit before you can actually lend. So it's actually going to make things a little bit more worse. And considering the exposure that they've got to the housing market, you saw in the Spanish press yesterday rumours that €1 billion has been pulled out of €1 billion has been pulled out of Bankia. You know, if it wasn't pulled out then, even though the Spanish government have denied it, chances are there's going to be quite long queues today, just purely on the rumours and the speculation and people becoming fearful. So it becomes almost like a self-fulfilling prophecy, unfortunately.
Josh, another big story, of course, this Friday is Facebook's share float. They're selling shares, and those shares, they've been priced at $38 per share. Do you think that Facebook could provide a little bit of optimism in all of the red?
Maybe for those who managed to be lucky enough to get on board, because you know, it's because there's such huge demand. I mean, Facebook, the popularity of this IPO has been absolutely huge. I mean, they had to increase the amount of shares on offer by 25% just earlier on this week, purely down to the demand. So if you're lucky enough to get on, which is a bit of an exclusive club, to be honest with you, for the start of it, then maybe it could provide a bit of a light at the end of the tunnel for some investors who've been hurt from some of the moves that we've seen over the last couple of weeks. But you know, the IPOs, they tend to be quite a volatile process. You know, they're never really smooth. I mean, whilst most of the IPOs get priced in to try and help the share price to rise on the first day, it doesn't necessarily correlate to a strong performance for the next month or 2 months. I mean, look at LinkedIn. LinkedIn, their IPO share price doubled on the first day and then subsequently fell off or sold off over over the following next 2 months before they lifted back up. So it's never a smooth process, but certainly it's going to make it quite an exciting afternoon's trading today.
I just wanted to ask you, you say that those who are lucky enough, or those who do get their hands on these shares, that they're lucky. I suppose that implies that we're going to see the share price rise from here on in. What do you say about that?
Well, I think on the first day, most IPOs are priced in by the banks to try and help the share price sort of swell a little bit on the first day. Obviously, we can't say it's definitely going to rise because, you know, no one's got the crystal ball, but certainly the popularity would dictate that potentially it certainly has the potential to rise on the first day. But as I say, IPOs can be incredibly volatile, and this one even more so, just pure by the fact that this is almost a celebrity status of an IPO, because everyone knows about Facebook. You know, everyone knows about Mark Zuckerberg, and that can actually cloud true market sentiment for the next month after just today. So I wouldn't judge demand, and I wouldn't judge the performance of the share price purely on today's performance alone.
All right, Joshua Raymond joining us there from London. Thanks very much indeed for speaking to us this Friday morning.
That's just about it for now, but thanks very much indeed, Marcus, for those business headlines. And that's all from us for now, but do stay tuned. Melissa Bell will be here after the weather with more news. Bye for now.
Could a miracle diet pill be back on the menu? Join us for Health This Week as we're weighing up options to beat globesity, a term that recognises the problem of obesity on a global scale.
Don't miss Health today, 4:40 p.m. Paris time on France 24.